Good afternoon. This is Tom Aspray with the Viper Report for Friday, October 12th, just after the close. Well, nice market rebound on Friday. You can see that leading the way was the NASDAQ 100, up 2.77%, followed by a 1.42% gain in the S&P and 1.15% in the Dow. This rally was pretty much expected after Wednesday's heavy selling. As I noted in Thursday's Viper ETF and Hot Stocks report, look for a 50 to 100 point S&P gain. So far, the S&P's got 38 of those points. And today's close suggests we will see more next week. Today's gains helped what was a horrible week, probably the worst of the last 6 months for sure. The Dow Transports led the way, down over 6.4%. with a 5.2% decline in the Russell. Industrials are down over 4%, as was the S&P. NASDAQ 100 down 3.27%. Even the secure Dow Utilities lost 1.4%. As I noted in the last email, the first warning sign of the market came on the first trading day of October. I discussed all the technical evidence in a new post, Early October warning signs. There's a link in the email. The reversal on October 1st, after a screamingly high open and sharply higher highs during the day, the market pulled back and closed well off the highs. That was a sign of weakness, particularly in light of the fact that the NYSE composite had triggered a doji sell signal after the September 21st high and formed a negative divergence. That all spelled trouble to the market, and things only got worse as the week progressed. We've had a number of special updates in the past couple of weeks, but in the Viper ETF report as well as the Hot Stocks report on October 3rd, we pointed out the deterioration in the AD lines, both the NYSE AD and the stocks only. That spelled trouble as we head into the week, as did the sharp uptake in new highs on Thursday, October 3rd. It was also a sign of weakness that the strong sectors, the consumer discretionary, the XLY, one of our favorites since the February-March lows, and the Dow Transports had both breaking down ahead of the market, and they got whacked this week. As I noted before, the Transports was down 6.4%, the worst performer of the major averages. The bearish evidence kept mounting, as on October 4th, the number of stocks making new lows surged to 425 with very negative breadth. That set the stage for this week's decline. I will be discussing these charts as well as some of the techniques that I use in tomorrow's free seminar at 1 p.m. Eastern Time on the Wealth 365. I have a link to the sign-up page. Hope to have you tune in so you can learn more about what I do in the markets. So more importantly, what does this mean for the major trend? I still view last week's decline as a pullback within the major trend, and therefore I would expect to see a good buying opportunity in the next several weeks, though there's likely to be some pain first, as the rebound that started on Friday is likely to fail and set the stage for more selling. So stay tuned. Hope you have your powder dry as we head into what could be a very good buying opportunity for a year-end rally. If you're interested in either of my premium services, you can go to viperreport.com. On the homepage, you'll see a link to the Viper ETF report. If you click on this, you'll see a description of the service, and then at the bottom of the report, you'll be able to sign up through PayPal. It's just $34.95 per month, and it can be canceled online at any time. If you're more interested in individual stocks, you can go to the Viper Hot Stocks report. It'll tell you about the service. It's also released twice a week and includes 6 trading lessons, as is the Viper ETF report, to all new subscribers. I hope you decide to join us. Thank you very much.